I head up the Glasgow office of Knight Frank. Knight Frank are a firm of international property advisors, which I'm sure most of you know. My day job, as well as managing the business there, is in the investment or capital markets side of things. Responsible for bringing capital, UK capital from the traditional UK investors, and also an ever-increasing band of international investors who are coming into the country, looking for larger assets, larger prime assets, and that is a continually growing part of our business. The various events in Scotland and politics and the wider UK has led to opportunities for a lot of overseas capital through slightly misplaced pricing. The weakness of the strength of the pound dropping has also made it given these guys an advantage, and we've probably, I think, see our latest stats, about 47%, certainly in the office market alone, is coming from overseas investors. So it's a very important part of our business.
Great, Simon.
Hello everybody, I'm Simon Etchells. I'm a real estate partner, recently joined Dentons. Those from Scotland will know McKay, Marrit and Spence, which joined Dentons in October last year. We're now part of the world's largest real estate department, over 1,200 real estate lawyers globally. We're one of the largest real estate teams in Scotland, so we tend to have our fingers in every real estate pie. Personally, I'm a Scots lawyer by birth and an English lawyer by further education, so I straddle both jurisdictions. So I'm very well placed to see the differences in investment pattern and work pattern between the two jurisdictions. My role in the business is leading a dual jurisdiction team and delivering both Scots and English law out of Scotland.
Great, thank you, Simon.
We just thought we'd confuse everybody by putting the two Simons next to each other.
True,
so yeah.
So
yep.
I'll have to be really clear when I say, so Simon.
So good morning everybody, Simon Parsons from Scottish Development International. SDI, as the Minister said, is the government's agency responsible for, national agency responsible for promoting Scotland overseas. Historically, SDI has focused on attracting companies and jobs and businesses to Scotland, but the government has now made the attraction of capital investment a strategic priority, and that is an area which we are resourcing accordingly. We have a series of events. We have the Minister, Mr. Brown, who just spoke there, will be speaking at an event in New York on the 5th of April to senior New York-based investors, again trying to fly the flag and show that Scotland's open for business. And this afternoon at 2 o'clock, for a shameless plug, if you don't mind, we'll be launching our investment prospectus at the DIT stand. You see it's very small, so you can take it home with you, and that will be profiling nearly £2 billion worth of investment projects which have been through due diligence and are shovel-ready and investor-credible. And it's just a part of our evolving approach to ensure that when we're engaging with the investment market, we can demonstrate that we have projects which can make a return. Thank you.
Great, thank you. Marrit.
Good morning, everyone. My name is Marrit. I'm responsible for running a fund within Redevco. Redevco is an investment management firm. It was founded in 1999 to manage the CNA store portfolio. Afterwards, the company grew considerably, and it's basically been transformed from a property company into an investment management company, and we're now running various mandates. So the total portfolio now comprises about 7.4 billion in terms of value, and it's spread across 11 countries in Europe. So I'm responsible for running one of those funds, and also responsible for research and strategy.
Hi, good morning. I'm Olivier de Bisscop. I think you're Dutch, no? Okay, perfect. Well, I'm Belgium, so that's also here's the border, but ultimately. So I'm working for JLL. I'm heading the Western European team, and JLL is a Munich-based investment company. I'm splitting my time being based between Munich and Brussels. We're managing around 10 billion of investments, and we're mainly an office investor. Let's say 80% of the portfolio is office investments. We also have a bit of retail, we have a bit of logistics, focused in US and Europe, but getting more and more global. So global in terms of people, but also global in terms of equity, and global in terms of locations too, because we just recently did an acquisition in Australia.
Great. Martin, it'd be good just to also demonstrate I guess the difference between you and Simon in terms of your roles.
Yes, good morning. So I'm Martin McKay. I represent Clyde Gateway. We are Scotland's largest and most ambitious regeneration programme. I deal with one specific area in Glasgow. As a regeneration company, we're about people, place and jobs, and I look after all of our capital investment activity from brownfield land remediation through to direct property development on behalf of the partners. And in addition to that, and more importantly, we work with a range of investors and developers on a range of projects, including Magenta, which will be one of Glasgow's and Scotland's largest business parks, and is one of the key projects within the DIT portfolio, which will be launched later today. So we are doing a wide range of activities across that. I'm really excited to be here at MIPIM and hearing some really positive things about Scotland, which I think is great for us.
Great, thank you. Carol.
Hi, I'm Carol McBain from Ryokan Hall Architects. I think we may be seen as one of the leading players in the Scottish architectural scene, and we're one of the bigger Scottish practices. Our work covers a broad range of sectors from master planning, education, commercial, healthcare, sports, arts and residential. And whether we're working for public sector clients or private sector clients, our aim is really to create environments which enrich people's lives.
Great, thank you. Rob.
Thanks, Richard. I'm Rob Sim. I'm Senior Partner at Europa Capital. We're a pan-European investment management business, traditionally known for running value-add funds, but most recently we are actually running debt funds and actually also a UK student housing fund, which we're currently raising. I'm from Edinburgh originally, but I've lived in London and Paris and Stockholm over the last 30 years. We do have some investments in Scotland, but our core markets tend to be UK, including Scotland, France and Germany. And, well, I like it because it means I can go home and see my mum sometimes.
Very good. Now, can everybody hear me okay? Perfect, okay. Good. Maybe starting with you, Olivier. You're obviously looking across Western Europe. So what we'll need to do is be efficient with that. Marvellous, you see. I knew you'd be able to do that. That would be great. Just looking at Europe at the moment. Let's take a quick view on Europe and also Scotland within that story. How do you see, I guess, the opportunities at the moment in the market in Europe, and where do you see Scotland within that?
Well, I told you I'm bringing a positive message. So in general, I'm obviously very optimistic and positive about Scotland. When we look at Western Europe or in Europe in general, I think it's very hard today just to make let's say, a statement where you say we're going to go to France and invest everything there, or we're going to go to UK. So, I mean, we today have, when we talk to our fund manager, much more a city approach, much more a regional approach, and for us, the power is to the cities. And we actually having that starting point, we then also go deal by deal basis. So it's just to now say you have to go there or there is very tough. When it concerns Scotland itself, we're owning there. We're having 3 assets, and actually, I mean, you mentioned also here in your movie, all the elements and arguments why you should go there, and I think that's a true reason. Infrastructure is important, livability is important. And actually, Scotland is pretty well positioned as an investment market there.
And do you I mean, there's been a huge amount of talk about risk more generally, political risk. Mm-hmm. Do you, from your perspective, with broadly German capital, how do you see Brexit? How do you see those kinds of things? Is that part of a larger story of political risk across the world and across Europe that you just have to get used to, or how do you see that?
I mean, it's a risk for sure. But when you go on the global scale, and there are a couple of countries where there's also quite a lot of political risks, you don't have to go that far. I mean, if we go to Central Europe, for instance, and you want to go to Hungary or you want to go to Poland, I mean, there are also a couple of risks there. So, I mean, we identify the risk, and obviously we have a lot of debates about it. And then also here at MIPIM, with the UK people, and in general, there's a lot of talks about it. But at some point, we need to take a stand, and that's why I think the deal-by-deal basis is very interesting, because it's not really cutting off that risk, because the risk is there, but it forms a pretty good hedge, downside protective approach for any potential risk, including the Brexit risk.
Okay, good. Marrit, I just wanted to pick up with you. In terms of let's say the investment strategy, what do you focus on when you're obviously invested in Glasgow? So what do you focus on when you're looking at investing in a city? What are the things that you're looking at? Is it infrastructure? Is it livability? What are the things that you're looking at?
Thank you, Richard.
That's great.
Well, we obviously as Redevco also have a city approach, very much like you do as well. So what we do is a lot of research into patterns. How do cities behave? We look at certain indicators, so for instance, economics, demographics, of course, property markets, but also we look at soft factors. So what we are noticing when we look at all of the patterns that cities are showing us is that those cities that are stronger in terms of tourism, in terms of points of interest and creativity, it shows that they are actually performing better. So we see that they are showing higher rental growth, and also in terms of capital values, the development is much more positive. And this is also one of the reasons why we are so fond of Glasgow. We are really interested in the city because we are seeing that it has, well, it's a city with some rough edges, obviously, but there is a lot of positive trends, and we see, because of those rough edges, and of course it's very interesting history of the industrial phase, obviously, that there is also a lot of creativity. There is a lot of universities, there's a lot of innovation going on. And this really is leading to a very interesting investment climate where, indeed, also where the other speakers said it's a very interesting place to spend time, because there's lots of things you can do, and there's of course, also very interesting, beautiful buildings where you can make amazing retail experiences, which is then, of course, our specialization.
Okay, good. And Rob, just in terms of when you're looking at investments, how important are things like, I mean, we've mentioned there livability, tourism, but are you also looking at infrastructure, how easy it is to get from one place to another, airports, those kinds of things?
Yeah, I mean, absolutely. I suppose we divide Europe up into regions, and within that we then have particular focuses on certain cities, and urbanisation for us is a big theme, which I know has been talked about in many of these panel sessions before. And it's really got to work for occupiers, and that being both on the commercial side and increasingly we're doing a lot of residential business both in the UK and in other European cities, and having that infrastructure in place, or maybe for our value add funds knowing it's coming and getting ahead of maybe other people, and actually creating a stabilised income stream is what we're trying to do for the next investor who comes along, because we obviously sell on to more core buyers, which obviously we like that works real well for us. Excuse me.
That's okay. And Simon, in terms of yes, that's Simon. Yes. In terms of infrastructure projects, I mean, you mentioned that you were actively seeking capital at the moment, and I'll come back to that in a minute. But in terms of infrastructure and improving that, how much of that is part of what the Scottish Cities Alliance is trying to do to create more connectivity, and maybe advise investors early so that perhaps they can also support that?
Yeah. Well, the government has an infrastructure investment plan which sets out its infrastructure priorities over the next 10 to 15 years. And those of you who know Scotland will know that the government has expended fairly significant amounts in improving the transport system with the new Queensferry Crossing road bridge across the Forth to give resilience for that key route. The electrification of the Glasgow-Edinburgh rail link, so you'll now have 4 trains an hour travelling between the two in as little as 42 minutes. So at a certain level, Glasgow and Edinburgh does perform as a single economic zone. So there's an agglomeration benefit there, which we need to be better articulating rather than competing against each other. And capacity improvements to the motorway system, again between Glasgow and Edinburgh, to improve journey times. All of Scotland's cities will benefit from the city deal, which has been mentioned already. I think it totals about 2.6 billion in its totality. That's jointly funded by the UK and Scottish governments, and there's common themes running through the city deals. A lot about innovation that's been mentioned. Building on our strengths in order to attract more businesses. There are a number of. Well, I always look for the evidence base because everybody at MIPIM tells you that they're brilliant at everything. But Ernst & Young publish an annual attractiveness survey looking at how the UK performs in terms of FDI. For the 6th successive year, Scotland is the best performing region outside London in terms of the number of FDI projects. So when people invest in Scotland, they tend to quite like the experience, and then we're very good at securing follow-on investment from companies. And the other interesting trend which is emerging is Scotland secured the largest number of mobile research and development projects anywhere in the UK, including London, in 2016. So people are obviously realising that there's some clever things going on, and we need to make sure we've got a modern transport infrastructure. And the Minister mentioned moving to superbrass broadband. That will be upgraded to 100% of all households, I think now by 2021. So no room for complacency, but I think we've got a lot of positive messages to get out to the marketplace.
And Simon, just in terms of the capital that you're seeing, do you think these things that Simon and Martin are doing, and the government is doing, regional government as well, do you think that's having an impact? Are you seeing different types of investor, more investors beginning to look at Scotland?
Well, I can't speak to whether there's a direct cause and effect, but we've seen a lot of activity. Our Edinburgh team have seen a lot of inward investment from German money, very directly from one of our colleagues on the panel here. We've seen Korean money coming in, with Middle East money, all came into Edinburgh quite rapidly. Which obviously is important for the profile. I think there's a slight, and John can talk to this more readily. There's a slight pressure on product, but that's probably a good thing if it means you've got demand. You've obviously seen Morgan Stanley into Glasgow. That's a real statement of confidence in the city of Glasgow. 1,200 people are going to be working for Morgan Stanley in Glasgow. Personally, I've seen we had a bit of an issue with IndieRef. I had clients telling me that they were going to continue to use me in England, but they're not going to use me in Scotland until we had Brexit. And then we're all in the same Brexit boat, and we got a bit of a thaw, and they decided that we were all perhaps equally unintelligent or intelligent, whatever your view is. And that thaw, that's come back. So we've seen more activity, and I'm doing more development in Scotland than I've done for 10 years, which surprised me, but I'm seeing quite a bit of activity.
So shall I put that down as a positive Brexit story, Simon?
I think we can spin that into positive. Yes, yeah.
Good. I mean, let's pick that up with you, John, in terms of, because you're obviously seeing the capital that's looking also at Glasgow. So are there examples of new capital coming in that you can give us?
Yes, Simon touched on it there. We worked together in a deal with the Korean investment coming into Glasgow for the first time, buying the new Morgan Stanley headquarters, which was an amalgamation of 3 Morgan Stanley sites plus a bit more to accommodate growth. And via our relationships with our office in Seoul, we brought a sizable chunk of investment into Scotland for that asset. They were very impressed with Glasgow as a city. We talked about infrastructure and motorways and airports, etc. When these investors are coming to Scotland, that's almost a given assumption that they will have that. They'll want to see it demonstrated, but it would be a shock for them to not come to Scotland and find that the infrastructure worked and there had been investment in public services. So it's vitally important that we keep that up, and we can judge ourselves against other locations in Europe. The money coming from South Korea is one example. We've seen a lot of capital come into both Glasgow and Edinburgh from the Middle East, and it doesn't show any sign of relenting. And the point about, I think Olivier made about a lot of these investors are investing in a global scale. So Scotland with a bit of political risk, or the UK with a bit of political risk, in comparison to what's going on in other parts of the world, it's relatively benign. Okay,
good. Martin, let's just dig down a little bit. I mean, we've talked about some of the capital that's coming in. Just tell us a little bit about the project, and also, because we picked up there from Marrit a little bit about how livability is important, also then from Rob about infrastructure, and John. How's that being dealt with in this project in terms of making it attractive as an investment vehicle? And I think there's a lot of residential potential there as well. So just give us a little bit more of a brief on that.
I think the first thing I would say for Clyde Gateway, we believe that infrastructure must come first. And that's one of our kind of mantras. So you'll have seen the photograph of the bridge earlier on, which forms a core part of a key walking route through our area. We're a large regeneration company. We're right on the banks of the River Clyde. And what we do is provide opportunities of scale, but opportunities that are de-risked. So we've dealt with the land assembly. We've dealt with the in-ground contamination. We've developed the planning consents. Everything's in place. And then we also have core development partners. Our core partner for the Magenta site, which can offer up to 1 million square feet of business space, is Highbridge Properties PLC, based in London, one of the largest operators of business parks in the UK. So we're able then to act as an intermediary between Highbridge and also the potential funds that might want to come in and invest. What we think we have a competitive advantage at Clyde Gateway is that we have lower operational costs. In terms of rentals are lower, the rates position is very, very good, and the running costs for the buildings are lower as well, because we're investing into district heating and cooling network and other sustainable forms of heat as well. So we have a very strong fundamental, but coming back to that kind of point about having distinctive places and places where people want to be, we're a bit rough around the edges, we admit that, but we're on the doorstep of Glasgow City Centre, and we're developing a whole range of residential developments around Clyde Gateway. We'll have something like 6,000 new homes, and we'll probably have around 6,000 to 10,000 people within about 20 minutes walk of the site. So, people will be less car reliant in areas like Clyde Gateway. They'll have great access to the universities and a lot of green space on the doorstep. And what we're seeing is that there's a lot of occupiers who want to be in the core business district. You would expect that. But there are others who are looking outside of the city centre, looking to create places where there is, which has a focus on health, on well-being, on healthy living, and focusing on how that can really benefit their employees. So we're at the forefront of that agenda and really hoping to kind of kick on with the Magenta site in particular, but other opportunities as well. So we can take a whole range of different types of capital, patient capital, or people looking for shorter term returns as well.
Okay, good. And I don't think, Marrit, you were necessarily talking about Martin and John. Let's pick that up with you, Carol, because it's interesting. We've had then the view here also about following the occupier in terms of what they want to do, also about livability, how important that is, sustainability, how that works for occupiers. I guess what are the trends that you're seeing in that, because you're obviously having the occupiers also telling you what they want in terms of architecture and the investors. What are you seeing?
I think some of the things that have come out of just being at MIPIM this week is the importance of universities being in cities. A big part of our workload is for education sector, and I think that there are opportunities for investors around about strong universities in cities. Both Glasgow and Strathclyde made the point at a panel the other day that they're not going anywhere. They're embedded in these cities, and so the opportunities that come along with development for research and innovation and connecting in with providing a skilled workforce, I think these are all really important things for Scottish cities. So alongside housing for students, where numbers are growing in the universities despite Brexit, it's about trying to retain students once they've had their education in Scotland, and making sure that we've got skills to make new business and keep the cities kind of sustainable and livable.
I mean, that's an interesting point. I mean, we did a focus on cities of influence yesterday, looking at some new research that colleagues had just done on that. And interestingly, Edinburgh came out on top of one of those, but the Scottish cities and some of the UK regional cities were much higher up than you would potentially suspect in terms of Europe, which was interesting. Rob, you've obviously launched a fund looking at student housing. We looked at that a little bit yesterday in a session as well. How do you see the opportunities in terms of that fund? Are you looking across Europe? Do you see more of the opportunities in Europe, or do you see them closer to home in the UK and in Scotland?
At the moment, it's just a UK-focused initiative, and we're funding 6 facilities. One in Scotland, actually in Aberdeen, just opposite Robert Gordon's University, and they are all basically, in our view, in cities which are growth locations. So that's the initial seed portfolio, and then we are looking at both standing investments and development opportunities, which include Glasgow, Edinburgh, and it's very much focused on, it's not every university in the country, but those that are growing, those that are attractive, and that will definitely include Edinburgh, Glasgow, and some of the obvious places in England. But I mean, that's a demand-supply dynamic that we like. It's, I think, resilient to political risk and even economic risk, because what we believe and what we found is that when you go into a downturn, people probably go back and educate themselves, and therefore it's generating a longer-term income stream for investors, and is actually improving. There's improving interest from a lot of international capital for that. So a lot of our investors in that fund will be both UK institutions, but actually increasingly some of our friends from Japan and other parts of the world are very interested in that sector as well.
Okay, good. And Marrit, let's pick up the retail sector as well. How do you see Scotland within that? Are the broader trend? I mean, there's obviously the broader trends that we're looking at in terms of urbanisation and also city centre shopping centres. How do you see the retail sector at the moment in general, and how do you see that in Scotland in particular? Do you see for your centre that you're going to get growing footfall? How do you see that, and how does tourism play into that?
Yes, obviously we are all seeing very rapid change in the retail sector. I think what we're seeing is that innovation and technological innovation is having a big impact. So online shopping is becoming increasingly popular, and just besides just the fact that it leads to lower sales in the stores, it means that people are taking just a different state of mind to when they're going shopping in the physical environment, because they're now much less in need of really buying products, because you don't really need to go out to buy products, but you can just order it online. But they now are, when they're going out, they are wanting to have a nice time. So it's really a need to enjoy rather than a need to buy. So this means that they have a different selection criteria when they go to shopping environments. They are looking for environments which, of course, have very high quality public areas. They have very interesting brands and beautiful stores, but they also have culture and other things to do. So food and beverage, restaurants, leisure activities, those are very important. So they all come into the mix. So we're seeing that people shop less often, and they're typically choosing different types of locations. And that's why we're seeing that those locations which offer this quality, they're really being very successful. So we are not negative or pessimistic about the possibilities in a retail landscape. We just think that you should know what you're doing in order to be able to be successful in the future and to understand what really the drivers of demand are. And I think that's also what we are seeing in Scotland. I think there is a very positive trend in Glasgow, where we're looking at Buchanan Street, where we have a couple of holdings, that there's been a lot of revitalization. I mean, of course, also the station, there's a lot of work going on there. Infrastructure works are very positive, and people are really coming there to enjoy and to spend time. And what we also see is that there are amazing buildings, and of course that's also important in terms of retail. It's a lot about branding, of course, so telling a real story. And with the opportunities that we have, so Princess Square, for instance, it really plays into that need for people to combine retail with leisure and food and beverage. So just to have a nice time out. So yes, we're very positive about it, and we see a very positive trend as well. At the same time, of course, Brexit we do see it as a threat because it's leading to uncertainty. I mean, we see that there was this survey from Merrill Lynch stating that the equities now, they're the least favorite in the UK from the whole of the world, and that's because of the uncertainty. And that's also what we are seeing in a retail landscape. Investments generally are lower, and also retail rental growth is becoming a bit more muted. So this is something that we need to, of course, keep into our minds. It's not putting us off in that sense. We still think that the structural drivers of growth are there, but those cities, of course, need to remain competitive with the other cities in Europe.
Okay, good. And Olivier, obviously, GLL bought Exchange Place in Edinburgh in May last year. And you focus a lot on the office sector. So what made this particularly attractive in terms of your investment? Because obviously that was, Brexit was still known about in those particular cases. So what made that an attractive investment in terms of the office sector?
Well, it fits a bit in the deal-by-deal approach. And obviously, I mean, if you wouldn't like Edinburgh, you would not go at all. But, I mean, we like Edinburgh in general based on the real estate fundamentals. And actually, if you look at the fundamentals there, it's actually incredible, because I don't know a lot of markets where, as a tenant, you need to forecast for 5 years where you're going to go. So in terms of supply and availability, that's absolutely amazing. So apart from that, the deal itself was pretty interesting to us because there was a bit of reversion. We felt there was a little bit of a discount onto it, which was on a price per square foot basis, an interesting deal. And then we had actually also a pretty solid tenant, which was a financial player, but one of the largest players in the world. So, there's a lot of talking around, but, we also own a building a bit further on Carlton Square, which is the headquarters of Baillie Gifford. And, you have a couple of occupiers in Scotland which are so strongly rooted there that, despite the events which are happening, I mean, if you talk with these people, they always want to operate from there out. So that was a bit the reasoning behind. Okay, good.
And maybe just picking up with you, John, if I can, looking across those sectors, what are you seeing at the moment? Are you seeing more investment appetite for retail or for office, or picking up on some of the logistics or some of the more alternatives like student housing or residential?
I think the short answer to that is across the board. The alternative sectors have grown hugely in the last 5 to 6 years. With long leases, geared uplifts, they appeal to almost everyone. The biggest problem that I have is in my day job as an agent at the moment is stock. We've development, particularly in the office sector in my city, has stopped through the independence period. The last wave of these buildings that were completed prior to that have now let and sold. And we are now looking at how our clients can get access to quality stock, and there's going to have to be a change. I mean, in terms of up and built office investments in Glasgow at the moment that you could buy for someone like Olivier, it would be difficult to find at the moment, and we are trying to push people towards, our institutions towards, more interesting approaches such as forward funding development, which would allow them to get their hands on best-in-class assets before they're built and come to the market, because otherwise it's difficult to see how they'll get that. In terms of sectors, again, the industrial sector is very, very hot at the moment in the UK. It's the same in Scotland for good quality stock, but again, there's not enough development to feed the demand there. So it's trying to, part of our job is to try and educate certainly the foreign investors that there are different ways to create the product, and see if we can get them to be a bit more open-minded about how they do that.
Okay, good. And Simon, in terms of the regulatory tax side, we saw there in the video things about planning consents being made easier, taxation being made easier. How much of an impact does that have on people, or do investors know about it enough, do you think? What's your sense of that?
I'm not sure investors know about it, and the proof will be in the pudding, because I think, as alluded to before, it used to be the development prevention approach to planning, and very welcome if we're moving away from that. I think we still do encounter difficulties, so I hope that the fine words come through with delivery. In terms of the fundamentals, and we had land and business transaction tax, was different stamp duty, which was I think caused in perception terms it was a negative. It obviously added additional costs, but people seem to have got past that, and it's factored into, it all just gets factored into pricing. I think the only folk who've suffered from that event in the finality have been the Scottish Government, because they've raised less money. But generally, in terms of how we, I don't think these are going to be major drivers to how we deliver the investments. I think it's more what John is saying. It's a more imagination. I'm interested in watching the local national governments and how they can better promote development. I've seen bluntly a little more imagination south of the border in terms of local government promoted wrappers. So quite often, if you can, you can provide the land, you can decontaminate the land, you can make it great, but folk are still going to look at investment fundamentals. And if a local body or a council is willing to say, well, we've got this many pre-lets, we will put the council covenant on the line, that massively increases the yield, massively increases the prospect of forward funding. And I do think that there are a few cities. I don't think you do that for where you've got a prime site and it's just going to develop itself. That's not the role of government. But I think where you've got a difficult city centre site where a council has ambitions to realise something imaginative, yet developers coming in look at that and say, well, actually fundamentally the profit coming out the other side or my ability to sell is not really doing it for me. That additional compression of the yield that can be delivered by a local government covenant could make the difference and allow for delivery. And I think there's a bit of catch-up in Scotland to happen around that, and especially if we're going to increase supply, would be my view.
Okay, good. I'll come to Martin and Simon on that in a minute. Carol, just from your point of view, because you mentioned student housing, but also I can see that you've been quite active also in a number of large-scale residential developments. What's the demand for that? Is there specific types of residential that people are looking for? And also, as a second part of that, have you got the right support from local government in order to help that?
I think affordability for people is a key issue. So helping to get younger people on the housing ladder, and making sure that there's a variety of options out there for people is one of the things that we've been looking at. I think there are opportunities that are maybe not being fully exploited in Scotland at the moment for maybe PRS, offering people more security of tenure than just simply the sort of buy to rent market. Also off-site manufacture. That's something that we're looking at on one particular site, but there's not a huge amount of that going on. So I think there's more could be made of that to cut down delivery periods on site. Just going back to your point about support from the authorities, I think all of the local authorities have affordable with a capital A targets and requirements to make sure that there are different tenures available for people, and so I think having local expertise in working with the planning authorities and in negotiating the way through all those requirements is an important part of our job, to make sure that the developer contributions can be understood and met.
Okay, good. So it'd be good to just get your sense of how the how government, local authorities are acting within that, but also it would be good just to get a rundown of I guess what each city has to offer in terms of the Scottish Cities Alliance in general, because it's a number of cities. So are there unique things in each city that they have to offer?
Okay, so the first part of that question about should the government be doing more to encourage speculative development, I think the answer maybe is yes, but I think that you're starting to see certain initiatives coming through. The rates reform has been very well received by the property market, and I think the view of the Scottish Property Federation is that the implementation of the recommendations went beyond even what they expected, and the rates position undoubtedly provide Scotland with a competitive advantage compared to the rest of the UK. And again, that's just trying to improve or help close the viability gap. So if you've got no rates, then you're not eroding your profit on development if your building stays empty longer than the period you expected. The government has also recognised through talking to industry, and it meets with, formally meets with the SPF twice a year through the Real Estate Forum, where they have access to a minister, that with the retrenchment of the UK banks following the financial crash, there is a gap in the market where funding was previously available, and what should the government be doing as a matter of policy and implementation to address that. And in the budget, very recently, under the chairmanship of Benny Higgins, who's the Chief Executive of Tesco Bank, the implementation plan for the Scottish National Investment Bank was announced, which we initially capitalised and operational in 2020 with £340 million of capital, and seeking to improve that to £2 billion of capital within a 5 to 10 year period. That bank has three principal aims. One of its an agreed part of its remit is to support speculative development where aligned to government strategy. So we can see areas such as industrial development, where we're trying to grow the manufacturing base. The government has a stretching housing target, so potentially build to rent. There could be a patient capital available there, where the government will participate. But the project has to be viable. This isn't a grant; it is on commercial terms. But the government is seeking to perform. And as a precursor to the investment bank being established, over the next 2 financial years, there'll be £150 million available for the Building Scotland Fund. So, that money arrives on the 1st of April. And, it's part of my job to, and with the other agencies such as Scottish Futures Trust, to help identify a pipeline of projects we think would be eligible against that. So you're seeing some more action from the government in a very proactive sense, which, again, as I said, we engage with industry on that. It should be industry-led. Industry creates wealth for the government to spend, and we try not to lose sight of that. As to your second part of your question regarding what the cities have to offer, yeah, I think Scotland's major cities do have competitive advantages. If you look at how Edinburgh is now fairly consistently ranked at the top of investability indices, second highest occupancy rate for hotels in Europe. There's no seasonality issues in Edinburgh. It is a 12-month tourism destination. This week we had the announcement of the first direct flight between China and Beijing, and our highest strategic aviation priority was to get a direct flight into China. We have that now through Hainan Airlines. And Edinburgh has a real competitive advantage around data. Andrew Kerr, the Chief Executive, is here as part of their MIPIM delegation. And there is recognition that around informatics and data and the strength of the University of Edinburgh, you can see real competitive advantage, which is why we have the software development centres for Europe for Microsoft, for Amazon, based in Edinburgh. You have 2 unicorns through Skyscanner and Fanjo using data, who came out of the University of Edinburgh, both now capped at above $1 billion. In fact, Skyscanner was bought by the Chinese. Glasgow's offer is much more, I think, around general financial services. Morgan Stanley's been mentioned, who came into the cities in investment and have grown very successfully. JP Morgan have done the same. Glasgow is the European Centre of Excellence for Satellite Production. More satellites are made in Glasgow than anywhere else in Europe. And again, that's back to the engineering skills and the industrial legacy. We've just had a satellite engineering company relocate from San Francisco to Glasgow because they recognise the talent and the skills in this particular area.
And similar weather.
Yeah, well, yes, indeed. Well, we brought it with us today to make this the most authentic Scottish event that you could possibly attend. And you know, around our key sectors, you know, oil and gas in Aberdeen has the highest concentration of subsea exploration companies anywhere in the world. And as oil increasingly moves to extract in more difficult areas, then we're trying to internationalise that key strength. Life sciences, you know, Dolly the sheep came out of Edinburgh, you know, the first cloned mammal. There are, you know, yeah, Dundee, the V&A is the first time the Victoria and Albert, a global brand they are understandably very, very protective of. This is the first time they have lent their brand to the opening of a design facility anywhere in the world outside the V&A in London. And when you speak to the V&A about that, it's about the creative strengths of Dundee. Grand Theft Auto was designed in Dundee, one of the world's most successful computer games. The Dandy and the Beano come from Dundee. You know, creative industries has a key strength there. And the Victoria and Albert Museum have a long historical link with the art school from Dundee. So I mean, that relationship has developed over time. And when it opens on the 15th of September this year, you know, we really think that that's going to, and you can already see it in terms of the profiling of Dundee in international magazines, that's going to give Dundee really put it in the spotlight, and Dundee's time is coming after always, for a long time, living in the shadow of the big two, or the big three if you include Aberdeen. So, yeah, we think we've got a lot to offer, and it's about getting the message out there.
Okay, good. And John, in terms of the international investors, if you're looking at, I mean, there's been a large trend in general for secondary locations around Europe. Is most of the international capital looking at broadly Edinburgh and then maybe Edinburgh and Glasgow and outside, or are you beginning to see people actually looking further afield and looking towards Aberdeen, looking towards other areas?
It's defined by the asset that's available. Really, the requirements tend to be for larger office or industrial assets, which provide a certain amount of income and a certain lot size. By default, these appear mainly in Glasgow and Edinburgh, with an element in Aberdeen, dependent on the oil market at the time. When you move into retail, etc., that can change through shopping centres or retail parks, as Rob would, I'm sure, agree. So really, it's about the creation of the asset. Edinburgh's the capital. It's probably the first dot in the map for a lot of the overseas investors. We've brought capital in there from everyone from German to an Indian billionaire in the last 2 or 3 years. But once they understand the system and the country and the asset, it's an easy step to make to go 45 minutes in the train to Glasgow and follow on there. Aberdeen is obviously very closely related to, the dynamics of the property market are very closely related to the oil market and what shapes in it at the time. But there was a real story there in the last few years where it was the one place in the country, probably, by that I mean the UK, where large global organisations were signing 15 and 20-year leases without any breaks, which was ideal for the overseas capital coming into the country. So there was a lot of investment in Aberdeen over that period. As we went through the oil crisis, that slowed. But I mean, there's a deal under offer in Aberdeen at the moment for the Aker headquarters building, which is a large lot size for Scotland. It's over 100 million sterling, and it's US private equity that's buying that. So there's clearly a spread up and down the country.
And just picking up with you, Martin, we had Kenny McKinnis on a panel yesterday talking about hotels, but investment, and talking about Inverness and various other areas to such a great extent that I think the entire panel and audience were intended to go on to Inverness on holiday after that. Such was his passion. Just in terms of how big a part is attracting tourists? I mean, we had mentioned there of direct flights from China. How much of that is an opportunity for Scotland as a whole?
Sorry,
in terms of tourism and attracting more people to Scotland, how much of that is in terms of building more of an investment rationale for Glasgow, but as well as for the Highlands and all of those other areas?
Yes, absolutely. I think that comes back to some of the points I was trying to make earlier on about Scotland being a distinctive place and about our cities being distinctive and different as well. Tourism is a huge aspect of Scotland, but we feel that that underlying strength really helps the performance of the cities. I mean, I'll maybe give a specific example. In Glasgow, we have the Hydro Arena as part of the SEC campus. It's one of the best music venues in the world. It's performing exceptionally well. And that has driven people into the city. We've had a bounce effect as well in the area that surrounds the Hydro, where the bars and restaurants are spinning up to support that. So that has a knock-on effect. And in terms of young and emerging companies, they then want to be in those types of places where those facilities are. And from Clyde Gateway's perspective, well, we're on the train line and we're only 10 minutes and a few stops away from the Hydro, so we can kind of get a bit of the Hydro effect coming through as well. But it also helps Glasgow attract global conferences. And when we bring in people from global cities, they then start to see the city with a different perspective. Most people will perhaps have, point I was trying to make earlier, people will have a view of Scotland as historically, but when they come here, they see that it is a new, emerging and interesting city. So tourism, big factor for us. If I could just take a slight deviation, maybe just to come back to Simon's point about the Scottish Investment Bank. From Clyde Gateway's perspective, we want to be front and centre for that. We've got de-risked opportunities that are ready to go. But we're also advocating to the Scottish Government that public sector relocations and public sector development can really help underpin regeneration areas, and we're advocating that they consider regearing some of these to 25-year leases and helping us access income strip models where we think that we can get probably down to sub 5% yield. So that's an important aspect for us in terms of trying to help underpin our development. But we're also working with the local authority, Glasgow, who've helped provide a guarantee for Clyde Gateway to help us to access some borrowing for some of the industrial space that we're building out. And our first industrial site at Clyde Gateway, we're developing there, but has recently been sold on to one of the UK's largest asset management companies. And we were hoping to announce that at MIPIM, but not quite there yet. But that deal's in the offing. So all of these things are very positive indicators for Clyde Gateway. So sorry for the deviation there, but the tourism thing, coming back to that, yeah, absolutely important for us in terms of how a city presents itself.
Great. Does anybody have any questions for the panel? If you do, just let me know. I've got one thing that I also want to check. You mentioned earlier about investment-ready opportunities. Do you just want to give me a flavour of some of those? Because I think you said it was 2 billion or something like that, the pitch book. So what kind of opportunities are in the pitch book?
So one of the things I meant to say earlier is I think one of Scotland's strengths is, as a small country, it's actually quite agile in its approach. You know, the business community tends to know each other quite well, and as a result, the public and private sector normally work in a non-confrontational win-win symbiotic relationship, hopefully for mutual benefit. With that, so leading on to your direct question, the 9 projects which we have profiled in the prospectus this afternoon are all speculative development projects. Some are mixed use, some are office schemes. I think the public sponsored projects, of which Martin's Magenta is one, is just over half of the 9, so that'd be just over half, be 5, I think. Yes, I'm going to do my arithmetic at this time of day. But we have private sponsored projects as well. So, for example, we are promoting a Scottish-based developer, HF Developments, Bothwell Street development. They're looking for speculative finance. It's got all the prerequisites in terms of consents. They've got a contractor appointed, ready to go. John mentioned that the demand conditions and lack of supply in both Edinburgh and Glasgow very much favour speculative development if we can just get it over the line and you know, present that robust business case. We're also promoting a mixed-use development in Glasgow through another very successful and high-profile developer called Chris Stewart, the Chris Stewart Group. We're promoting a large mixed-use scheme adjacent to Edinburgh Airport through Murray Estates. That's the first phase of that, which is a mixed-use scheme. Then moving into the large-scale, strategically important public sector projects, Dundee Waterfront, where there are development plots available around the V&A, are actively being pump-primed. Enabling infrastructure is all done by the public sector. So you know, now time to move on to getting the buildings out of the ground. So we have a reason, and we've got a project, a large project that's just emerging in Perth, which has just very recently gone through due diligence on the edge of Perth. Again, a privately sponsored project through the Dewar Trust. I think that's part of the whisky legacy from that family. So no, there is a reasonable spread. They do. I mean, just because of where we are, there is a weighting towards the West of Scotland projects, and our newest one there is we're promoting a new manufacturing, what we call it, an innovation district directly adjacent to Glasgow Airport. That land has been acquired by Renfrewshire Council, 130 acres. They have £40 million of Glasgow City deal money committed to driving the enabling infrastructure and the spinal road. We think that the fundamentals around that are very strong, given the existing manufacturing base, including the likes of Thermo Fisher and Rolls-Royce. And the government, to anchor that development and really drive it, has committed to spending £65 million to build Scotland's National Manufacturing Institute, which will be a sector of excellence, again drawing on Scotland's technical skills, where academia and industry can invent new products. And we've got early signs of that already with aviation, where we're seeing a lot of demand from large Tier 1 suppliers working with particularly Strathclyde University, looking to change from metal component manufacture, which is heavy and uses fuel, to composites, lightweight plastics, and how they can be manufactured through modern printing methods, and of course undergo the required stress testing to be accepted by the likes of Airbus and Boeing. And yeah, there's some really positive indications that that's where we can really grow the economy in the West around that sort of skills.
Okay, great. We've kind of almost run out of time now here. So I'm just going to do a quick one, which is you can either decide to tell me what you think the best investment opportunities are in Scotland, not classic cars or whiskies. I've occasionally woken up with a whiskey legacy myself sometimes. John, starting with you, you can either tell me the outlook or where people should invest.
Sorry, do the mic here.
Yeah, here the mic.
I'm based in Glasgow and work in real estate, so I'll be very biased and say it's Glasgow real estate. But we touched on it. I think the supply and demand dynamics and certainly in Glasgow and Edinburgh at the moment, Aberdeen is slightly different. Within the office sectors are hugely in the landlord's favour at the moment, or the developer's favour. Glasgow as an example, we have zero Grade A property, Grade A offices under construction at the moment on the back of the last wave being let and subsequently sold. The HFD group scheme that was mentioned earlier is probably one of the best sites in the UK for prime offices. There's rumours that half of the building is already spoken for in terms of a pre-let. If that's the case, it leaves just under half of the building still to be let in a city with a huge amount of lease events over the next 24 months, and the opportunity to go in and, as an institutional funder, to go in, fund that development and be the owner of what will be an absolutely world-class office asset at the point of completion, probably a slight discount in yield against what would be required to buy it as an up and built investment, I think is a fantastic opportunity.
Okay, good. Simon? Outlook, positive, negative?
It's going to sound like a Glasgow show. No, not quite that. I think both Glasgow and Edinburgh on the office side are going to remain very strong. As a business, one of my partners has continued to see the build out and pre-let of the buildings in the quarter mile. And so I think there is, though, a bigger opportunity in Glasgow. I've got clients looking at even speculative office development in Glasgow, which is pretty unusual these days. I do think, personally, Glasgow's got the edge because of its transport links. I think Edinburgh, I don't know how you fix Edinburgh and its traffic, but it has a traffic issue because it's just the way it's built, and it's got that wonderful centre you can't knock about, which we did in the 60s, and it wasn't a good thing then, but it's proved to be a good thing now with the M8 going straight through the city. So I think Glasgow's got a strong story. I'm slightly uncertain about prospects for a student accommodation. I do think that's getting slightly heavy, so I'll have a discussion with Rob about that.
Good. Outlook, positive?
Well, hopefully we've demonstrated that today. Allow the audience to judge for themselves, and having a national remit, I couldn't possibly be drawn to favour one project over another. What I would say, though, if you'd like to judge for yourself, then come to DIT at 2 o'clock and pick up one of these when it is launched through with a UK government minister and myself and others will be speaking at it.
Excellent. Very good. Marrit?
Good to see that everyone's true to their colours. It won't be different from me, of course. So retail it is. I think you would prefer Glasgow at the moment because we're very active and we see that there's a lot of positive things going on, but there's also still things that we can do, I think, in terms of changing functions, in terms of optimizing buildings, and there's some opportunities with great buildings, with great historical characteristics that we can make even more beautiful, to make it an even more interesting retail, well, a place to be, I would say.
Great. Olivier?
We're positive, so we're going to keep on looking for deals, Edinburgh, and after listening to Marrit, I definitely have to buy some retail in Glasgow, so I think that might be the next pick. Thank you for that.
Great. Martin?
Yeah, absolutely think it's a positive outlook. I think we're on the tipping point at Clyde Gateway of really making a big difference for there, but I guess my message is that if you're going to invest, it has to be sustainable and resilient. These are the things that are important. So don't take a short-term decision. Look at the longer-term prospects and try and invest in places that people want to be. And we think Clyde Gateway is that. So we're feeling very positive.
Great. Carol?
Yeah, I'm going to keep up the positive theme. I think it's great as an architect to hear everybody across all sectors talking about things like placemaking and attractive places and making buildings which are visible and identifiable and creating sustainable places, because that's kind of what we do, and we're definitely in the market to help people add value to their investments by our design and our kind of cross-sector skills. So,
great, very good. Rob? Student housing?
I'm not going to say student housing. In the past, we've done quite a lot of retail warehousing, repositioning retail warehousing in Ayr. We own one in Glasgow. We're probably a little bit more cautious on retail now. We like convenience retail. But if I had to choose now, it would be repositioning office buildings, which we're doing a lot around Europe. And we've been looking around Glasgow and Edinburgh. We did it in Aberdeen and got our timing just right, and that's what it's all about. But when you look at vacancy rates across most major European cities down in low single figures, then something's got to happen. I think spec development's still very difficult, so repositioning existing buildings is probably what we'll do.
Okay, good, thank you.